Hey y'all, how's it going? I'm trading the ES futures on a 2000 tick chart with a 21 EMA. So I've got my overnight highs up here, overnight lows down here. We pushed off at this level right here, which ends up forming our overnight low very strongly. We had that leg up, break, a second leg up. It didn't quite reach it until later, but we attempted to reach it there, but then we kind of went sideways. So I started around this area right here as it started forming this range. This is 8 o'clock right here. So we had this uptrend, break, new high, and then we immediately started going sideways. Now, starting off here around 8, we have this first entry long, second entry long, but it's pushing below the EMA. And it's not like this range is strong at that point. I mean, that's just kind of a nothing swing. That's not a very important swing. And it's making a double bottom with it, sure, but you're below the EMA, you rush below, and it's not like it's an important level at that point. And then we kind of just chop around. We push above, push back below. You don't want to enter that. That's just, price doesn't know what it's doing. Some people are trying to, Some people are trying to reverse because these two legs up here, it nearly reached it. And so when you rush below the EMA like that and then close back above, it's just price competing. It's just the bulls and the bears competing. You want to wait for one to win out more. So that's why I don't like that. And then we push up here. We make this double top right here, and then we push off of it, and so then we can get the highs up there. We push lower. We have this strong leg out. Now that's really just one leg. There's a tick higher right there behind that arrow right there. But that's really just one leg, one strong push out. You don't want to immediately go long. You don't even have you don't have a break and then a couple attempts. You just break and, fade that range right there. And then you don't quite reach the highs of that range. Then you just push back below the EMA and one strong, just a strong push down. You don't want to enter long into that. It's clearly forming a bearish imbalance in this range. It couldn't reach the other side, mixed with the fact that this uptrend did have a break and a new high, and that's a good place to reverse because the uptrend has a break, new high, and then you rush below the EMA strongly like that and then can't even reach the high. That's a sign of reversal. So you really want to be careful. You don't want to enter long in something like that. But then we do have this second attempt to reach that measured move here, and I don't like entering here as well because, once again, we are at a reversal area, and then if we could have gotten something above the EMA that held, then I would have liked it, but we don't get that here. It just closes on the end of that range. So we do push off here, and then I did end up extending this down to here because you can extend ranges after they get multiple breakouts if the breakouts are around the same level. So anyway, we push higher here. We have this strong push up. So basically, this is an attempted reversal. The uptrend played out, two strong pushes down. That's a failed reversal right there. We strongly push higher. We reach those highs. It really just got congestive. That's just one straight leg. You don't want to immediately short as soon as it hits that level right there, because it does have a straight leg up there, very strong. And then you get this break. You get one attempt at a new high. So like uptrend break, one attempt, but it's pretty choppy, and you'd probably want to wait on a reversal pattern back down if you want to go short, because even though it was just trying to reverse down here, that's a failure. And so, if it fails to reverse down, then it's strongly heading in the other direction. So you don't want to immediately go short. You want to wait for confirmation with the EMA, which you just don't get. Pushes down here, it just bounces. You don't get anything that actually holds below the EMA. So you push up here, you get these two legs up here, which of course end up using as one leg on a bigger picture later, but I'll get to that when I get to it. So we push up here, we have those couple legs up, nothing, it's not off of any resistance right here. It did reach that measured move at this area here, but it just got congestive, and just because it reached a measured move, that's not reason alone to enter something, and it's not like it's any other good setup here. It's just, goes sideways. But we do push down here, we have this two-legged move right here, so first entry, second entry, we're starting to get this uptrend here. Let me move it exactly to that right there. So we have this uptrend forming, and then we have a third bounce right here. Now, remember, we failed to reverse down. We have this strong push up, and then a two-legged correction. And so I can expect a second push up here because clearly it failed to reverse. We had a strong leg up, and market moves in twos. Measured moves are important. And so when we have this two-legged move down here, and then it even looks like it traps lower here because it just goes all the way down, and then it just goes all the way back up, all in one bar. So that's a strong, that's how pin bars form. That's why pin bars are so important, because it's basically trapping shorts. They're all piling up, and then at the very last second, it snaps back, and then it held on to this bar right here, or it held on to this channel right here, and then I just wanted to get out before that range high to be safe. So I think that's like, I forgot the exact RR. Let me check. That was 1.5 RR right there. So 1.5 R. I just didn't want to push it to 1 to 2. I didn't want to push it past this. We did pierce through it quite a bit, but you do want to be safe because that measured move right here was in play still technically, and so it wouldn't be unsurprising if it bounces off of a resistance level like this and goes back down. So you just want to be safe with like that. But anyway, we push higher here. We start reaching this measured move. We start really getting up there, and then we have this uptrend. We have this small break, new high. That's just a doji bar. You don't want to enter long right there. Then we have this first leg down, very strong leg down, break, and then another attempt down, and then it holds onto this resistance right here. And then also, if you draw an STT right here, you do close out of it on that bar, which I would not have entered if it closed in. I would have waited, because I think, here's what I'm thinking here. If it did close in the STT right here, with short-term trend line, then this bar right here looks good to enter on after it closes back above, and then you just use the same stop. But it did close out, so I did like that there. Because we had this major measured move in play, and we had this uptrend in play, and even though it looks kind of sideways congestive, you can still tell what prices are doing. It's not like it's complete chop. You have this downtrend, clear break, clear attempt at a new low, clear rejection of this level with this measured move in play, strong uptrend. We failed to reverse, so that's why I like that right there. I didn't push it quite all the way to that level. I just took it at 27, so just a couple ticks below, but because I was concerned about possibly something right here, so I didn't mind pushing it through. It's a strong level, but I didn't care to I just took it at 1.5 exactly. I didn't want to push it for more than that. But anyway, so we push up here, we reach that measured move. As soon as we reach that measured move, we have a very clear reaction. We push back below the EMA. You don't want to enter long like that below the EMA. It's just, it gets choppy, and once again, clearly rejecting the EMA with those bars. You don't want to enter into that. Now we push higher here, so this uptrend is continuing, and we just don't get any longs in this area. And then we push back below the EMA. It kind of chops between up and below the EMA. Then we just push on down, and at this point, when price was in here, here's what was happening when price is right here. You have the uptrend in play, and you're at the overnight high. So that's a competition between the bulls and the bears. The bulls want this uptrend to continue. The bears are trying to use this as this failed breakout, or they want to use this breakout to fail, because most breakouts fail. But of course they can succeed, especially when you have a trend in play. So it's kind of just a confusing area, because you have the uptrend, you have the overnight high. There's going to be people on both sides of that. It's best to avoid areas like that. So that's why I don't like going long right there, because this is a strong level that people are absolutely trying to fade, especially after a measured move like that. So anyway, we just push down. We don't get any good entries in here. We just go into this downtrend. We overshoot. Now, I kind of missed out on a trade in this area right here. I was away from the chart, but I don't like entering above this bar right here, because you do have this downtrend break. You can expect a possible new low, and you would really just want confirmation above the EMA. Now, the reason that I like entering on this bar right here, which once again I missed this, but I would like entering right here, because we have this overshoot, so I'm not concerned about having two attempts at a new low or anything. So it's a clear reversal pattern right after an overshoot of this downtrend right here above the EMA, and yeah, I saw some people marking that, and I'm glad y'all got that. So anyway, we push excuse me, we push higher here, we get congestive, it just goes straight sideways, and then we kind of just rock it out of nowhere. There's really no reason to go long here. It's off the EMA, sure, but look how sideways that is. We push up, we overshoot this trend right here, we're back above the overnight high, so, and then I haven't really seen much of this, so basically we push lower here, we don't quite reach the EMA, once again make a new high. It's kind of just going sideways. We got a range going on here, so goes into this range. We have this breakout, 2 legs down right after an overshoot. And remember, you know what overshoots mean? Overshoots basically are telling you that price is overbought without needing indicators. Because if you have a channel and it breaks, that means the bears say, or let me be clear. Say you have an uptrend and then you get a break. That's telling you that bears pushed it out of the channel, right? Now, if you have an uptrend and then you overshoot, that's telling you that there's lots of bulls, and that's why overshoots lead to breaks so often, because it means they're overbought. But yeah, so as let me get this trend line exact. So we push up here, we overshoot, we immediately break. There's really no good entry here. I mean, it's just, right after an overshoot, you don't want to just buy because it's off the overnight low. It's not any other setup. It's, yeah, you got 2 legs back, it rejected the EMA. You don't want to go long there. And you don't want to go short here either, because that's not off of anything. That's really just in the middle of this range here. And then lower high, it's not a good looking lower high. It has a terrible bar directly into the overnight high. So there's absolutely no reason to take that right there. And yeah, I guess we're at the end of the day here. So thanks for watching. Hope you all enjoyed this video, and I will see you all next time.